Why XLM's institutional comeback is just getting started. The retail wave is over, and that's a good thing. Let's call it what it is. The age of retail hype is coming to an end. For years, Stellar got lumped into the altcoin noise. Traded, dumped, forgotten. Only to resurface when the next bull run dragged it back into the spotlight. 2017, XLM rode the ICO wave. 2021, it got swept up in the meme mania, the NFT rush, the anything goes chaos. But here's the truth no one wanted to admit back then. Most people didn't care what Stellar was building. They only cared that it pumped. And once the hype dried up, so did the interest. Now fast forward to 2024, early 2025, and something massive has changed. Retail isn't leading the charge anymore. The frenzied chase for the next 100x meme coin is slowing down. Even the loudest voices in crypto Twitter are quieter than usual. Because this cycle is not about who can shill the hardest. It's about who's actually solving problems. And this is where Stellar flips the narrative. While the masses are distracted by cartoon coins and AI tokens with zero traction, the real money is getting laser-focused on one thing: infrastructure. The serious players, the ones wearing suits, not hoodies, are looking under the hood. They're not asking how fast can it moon. They're asking, can it scale? Can it comply? And can it integrate? Ethereum? Still clogged. Still expensive. Solana? Still fighting uptime issues. L2S? Still figuring out how to coordinate with their base layers. But Stellar? Stellar has been waiting for this moment. Soroban is live. It's fast. It's efficient. And it's natively built to integrate with Stellar's existing payments layer. That means smart contracts meet global money flows seamlessly. And more importantly, it means institutions finally have a blockchain that isn't trying to be everything to everyone. Stellar is zeroed in on what matters: compliance, scalability, predictability, and real-world finance. This is the transition moment when retail takes a back seat and enterprise starts driving. And you better believe Stellar's been quietly building its position at the front of that convoy. Because now that the market's calming down, now that institutions are scanning the field for serious infrastructure, Stellar's not just ready, it's positioned. And this new wave, it's not a pump cycle, it's an adoption wave. And it's just getting started. Enter Palago Labs. Institutional DeFi goes live. Here's where the storyline breaks wide open. Because while crypto Twitter was busy counting XLM out, Palago Labs came out of nowhere and completely rewrote the script. No hype, no fluff, no soon, just real-world infrastructure. Built, deployed, live. Palago isn't trying to be another flashy DeFi farm with sky-high APYs and rug pull risk baked into the code. They're building for the grown-ups in the room, the companies that run global trade. And they're doing it on Stellar. We're talking about on-chain invoice factoring, where businesses can tokenize their outstanding invoices and get access to capital in real time. We're talking supply chain liquidity, unlocked with smart contracts. B2B lending rails. Digital trade finance workflows that used to take weeks, now settled in minutes. No vaporware. No speculative tokens with roadmaps pushed to 2026. Just enterprise-grade DeFi tools that solve actual financial bottlenecks. And the most underrated part? Palago is going after one of the biggest untapped markets in all of finance. The $3.5 trillion global trade finance gap. That's not a meme coin market. That's not a DX war. That's real money, stuck in outdated paperwork, disconnected systems, legacy rails. Palago's goal? Unlock it, all of it, with Stellar and Soroban powering the back end. And here's why that's such a game changer. Soroban isn't just another EVM clone. It's designed for speed, low fees, and deterministic smart contract logic, meaning enterprises can build with confidence. No surprise gas spikes. No flaky chain congestion, just stable, composable infrastructure they can actually trust. And with Palago deeply integrating into that, you're now looking at institutional-grade programmable finance that doesn't need to sell hype, because it's already solving pain points. The traction is real, quiet but real. Pilots are happening behind the scenes. Stakeholders are watching closely. And the second that proof of concept turns into proof of scale, the floodgates open. Because institutions don't care about trending hashtags or token airdrops. They care about systems that work, systems that scale. Palago plus Soroban delivers exactly that. This isn't a bullish news cycle. It's a structural shift in what Stellar represents. From remittance rails to enterprise-grade DeFi. From a retail coin to a regulated financial backbone. And from speculation to infrastructure. If you're holding XLM, you're not just betting on a coin anymore. You're betting on the future of compliant, scalable finance. And Palago Labs? That's the tip of the spear. Why compliance is the killer feature. If there's one thing that separates real infrastructure from speculative hype, it's compliance. Not speed. Not yield. Not flashy roadmaps. Compliance is the killer feature. And Stellar has understood that from day one. While most chains were obsessed with scalability benchmarks and TPS flexing on Twitter, Stellar went the other way, quietly embedding regulatory alignment into its DNA. Transparent governance. On-chain identity rails. Native support for KYC/AML workflows. Stablecoin issuance standards. That's not sexy to the average Deegan chasing a meme coin. But for institutional players, that's the deal breaker. That's the unlock. That's the green light. Because banks, governments, and fintech providers don't need blockchains that are fast. They need blockchains that are compliant, reliable, and auditable. And here's what makes Stellar dangerous, in a good way. With Soroban now live, Stellar no longer has to compromise. It doesn't need to choose between being compliant or programmable. It's both. Smart contracts that execute at scale with the regulatory controls built in. This isn't a workaround. It's native. That means a bank can tokenize an asset, layer it with Soroban logic, plug it into Stellar's cross-border rails, and stay fully within regulatory boundaries. No third-party middleware. No external bridges. No legal gray zones. Just clean, scalable, institutional-grade infrastructure, end-to-end. And here's why that's suddenly very relevant. Because the institutions that sat out the last bull run, they're not sitting out this one. But they're also not deploying capital on chains that don't take compliance seriously. Ethereum, great dev community, but unpredictable gas fees and no native compliance rails. Solana, high throughput, sure, but it's still proving itself on reliability and uptime. Most L2S, still in beta mode when it comes to enterprise integration. But Stellar? Stellar has already handled real-world cross-border payments. It's already worked with MoneyGram, Circle, Flutterwave, and government-backed CBDC pilots. It's already been there in the rooms that matter. And now, Soroban brings smart contract flexibility into that same trusted ecosystem. It's no longer a question of if Stellar is ready for institutional adoption. It's a matter of when that wave goes mainstream. This is why institutional capital is starting to quietly rotate back into the XLM conversation. They don't need promises. They need infrastructure that works with regulators not against them. And Stellar has been building for that moment for years. That's why compliance isn't just a feature. It's the foundation. And for XLM holders paying attention, it's the signal in a sea of noise. The enterprise wave. Who's actually building on Stellar? Let's cut through the speculation and ask the only question that matters. Who's actually building on Stellar? Not talking about it, not writing white papers, not pitching ideas to VCs. Actually building. Because if you want to know where real adoption is headed, look at what's shipping. Look at who's integrating. Look at where real capital is flowing. And Stellar? Quietly, it's becoming the go-to chain for institutional infrastructure. Let's run the list. Palago Labs, building out trade finance rails for real-world companies. Not theoretical DeFi experiments, actual supply chain financing, on-chain invoice factoring, and automated settlements. This is billion-dollar market activity, fully programmable, fully compliant, all running on Stellar and Soroban. MoneyGram, one of the largest remittance giants on the planet. They're not testing blockchain, they're already live, fully integrated with Stellar, settling real transactions across borders, enabling cash-in and cash-out globally. That's not a partnership announcement. That's production infrastructure. Franklin Templeton, a $1.5 trillion asset manager that didn't just explore tokenized finance. They deployed it. Their on-chain U.S. government money market fund runs on Stellar. Why? Low fees, regulatory clarity, high-speed transactions. They chose Stellar over Ethereum for a reason, and that reason matters. Circle's USDC, the gold standard for regulated stablecoins, fully integrated on Stellar, and being used right now for cross-border payments, stablecoin liquidity, and enterprise-grade financial flows. This isn't a sandbox. It's the real economy. So now ask yourself, what do all these players have in common? They're not here for memes. They're not building pump and dumps. They're not chasing clout on crypto Twitter. They're deploying mission-critical infrastructure. And they're doing it on Stellar. Why? Because Stellar delivers what institutions actually need. Built-in compliance, predictable ultra-low fees, scalable smart contracts with Soroban, proven partners already integrated. This isn't theory anymore. The institutional flywheel has started. And the next phase? It's about acceleration. Because more players are coming: banks, payment processors, asset tokenization platforms. And they're not going to take a chance on blockchains still figuring out how to comply with regulators. They're going to go where the rails are already built. And that's Stellar. Most of crypto is still obsessed with the next hype narrative. But while the noise dominates the headlines, the infrastructure is quietly being built on a chain most retail investors forgot about. That's the opportunity. Because once the narrative shifts, once the market wakes up and realizes real-world adoption is already happening on Stellar, it's not just institutions that pile in. Retail follows. And by then, the smart money is already seated. What this means for long-term holders. If you've been holding XLM through the silent seasons, through the sideways charts, through the headlines focused on everything but Stellar, this is your moment. Because what we're seeing now isn't hype, it's validation. And it's happening in real time. Here's what this actually means if you're a long-term holder. 1. You're holding regulatory-aligned infrastructure. While other chains are scrambling to retrofit compliance after the fact, Stellar built it in from day one. We're talking native KYC support, regulated asset issuance, stablecoin interoperability, and real partnerships with governments and fintech providers. In a post-FTX world, that matters more than ever. 2. You're positioned ahead of institutional capital. Before the crowd chases headlines, before price action goes vertical, institutions are already moving. Stellar is now the base layer for tokenized money markets, cross-border finance, and programmable trade platforms like Palago. That's not a hype cycle. That's a macro thesis. 3. You're early because price hasn't caught up yet. And that's where the alpha lives. Most of the supply is still liquid. But that won't last forever. As more institutions lock up XLM for settlement, for liquidity provisioning, and for smart contract execution, the available float shrinks. Demand grows, and that's when price moves fast. This isn't about wishful thinking. This is about supply-demand mechanics meeting real-world adoption. And while retail continues to chase meme coins and speculative trends, you're sitting on one of the most fundamentally sound plays in crypto. But only if you understand what's really happening here. Because once the headlines catch up, once influencers start noticing, once price starts reacting to what's already been built, the early window closes. So if you're holding XLM right now, you're not late. You're positioned. Just don't forget why you're here. The next wave isn't retail-driven. It's enterprise-powered. And Stellar is already leading that charge. The institutional wave is just beginning. So here's the bottom line. Clear, undeniable, and impossible to ignore. Stellar isn't just surviving this market. It's evolving into something much bigger. While most of the crypto world was distracted chasing the next meme coin or high-yield rug pull, Stellar was doing the exact opposite. It was building in silence, laying foundations, signing deals, prioritizing real-world finance over fake volume. And now, that slow, steady grind is starting to pay off. Soroban wasn't just another smart contract platform. It was the missing piece that institutional players needed to take Stellar seriously as a programmable blockchain. And once that was live, Palago Labs showed up and proved what real institutional DeFi looks like. No vaporware, no empty buzzwords, just real-world finance, tokenized, automated, and deployed on Stellar. That changed the narrative. Because for the first time in years, Stellar wasn't just a payments network. It became a full-stack financial infrastructure layer. Fast, compliant, enterprise-ready. And now, the institutions are paying attention. Not because of hype, not because influencers said so, but because the fundamentals are too strong to ignore. This is what banks, fintech firms, and asset managers have been waiting for. A blockchain that speaks the language of compliance. Smart contracts that are predictable and secure. A network that's fast enough for real money and stable enough for real trust. Stellar checks every box. And here's what makes this moment different. In past cycles, institutions were skeptical. They saw crypto as noise. Too volatile. Too unregulated. Too unpredictable. But now, the environment's changed. Regulation is here. Governments are pushing CBDCs. Banks are looking to tokenize assets. Payment firms are ditching legacy rails for blockchain speed. And Stellar is already built for this moment. That's why the institutional wave is just getting started. Because while other chains scramble to become enterprise-ready, Stellar's already there. It's not pivoting into regulation, it was built around it. It's not trying to bolt on compliance, it's baked in. It's not pitching a roadmap, it's shipping real products with real partners in real markets. So if you've been on the sidelines thinking Stellar had its day back in 2017 or 2021, you're missing the bigger play. This isn't the old XLM you remember. This is the infrastructure layer for compliant, institutional-grade blockchain finance. And as that next wave builds, as more institutions integrate, as more capital flows in, as more real-world applications go live, XLM's role becomes foundational. This isn't just a bounce. It's a new chapter. And it's not being led by hype cycles, it's being driven by enterprise adoption. So the question is, are you paying attention before the headlines catch up? Or are you going to be chasing price after the wave is already in motion? Because one thing's for sure, the institutional era of crypto is here. And Stellar is one of the few blockchains actually built for it. And if you're still watching, you already know this isn't just another crypto project chasing hype. Stellar is building something real. So here's what you do next. Smash that like button, hit subscribe, and turn on notifications, because we're dropping deep dive alpha on the plays that actually matter. And if you're serious about getting ahead before the crowd, this channel, it's your unfair advantage. Stay smart. Stay early. This is Be Crypto Smart, and we're just getting started.